New data suggests that the housing market may be starting to thaw out. Mortgage rates are plummeting, listings are on the rise and are soaring, and applications are through the roof. But is this the real deal, or is it a short-lived blip on the radar screen?
I'm Kiwi of the coast, the agent with the most.
Helping you maximize and sell the value of your coastal home, right? Let's dive into the data. So the interest rate on the 30-year fixed loan just tucked under 7% for the first time in months. It had peaked at over 8% in October, and that was a 23-year high. In response to that change, Redfin says mortgage applications are up 15% since early November, when they had hit a 20-year low. And new listings of homes are up 7% from last year when the interest rates were spiking. So of course we're seeing applications to purchase homes on a serious increase. But if the housing market truly is thawing, we're not seeing it thaw that quickly. In fact, there are some indications out there that drop-off is already happening. So what's going on? So although these interest rates have been a welcome relief, we need to see a lot more dropping if we're going to see an increase in demand. Mortgage rates have decreased recently, and why is that? Well, the Fed has stopped raising interest rates for the moment. Between March 2022 and July 2023, the Fed raised its benchmark rate from just over 0 to that range of 5.25 to 5.5. That was a dramatic change, and that made it much more expensive for borrowers to obtain loans. But it also meant that those people that had those interest rates that were sometimes in the 2s, but mostly in the 3s and 4s, were very hesitant to sell. And that exacerbated the situation because guess what? Low interest rates were locking those particular homeowners into their homes, and they weren't selling. So the lack of homes in the marketplace contributed to a rise in those purchase prices. Now, a month or two of improvement can only go so far into improving the current situation. Redfin said that over the last 12 months that ended December 3rd, the median sales price of a US home rose 4.1% to $364,166. Because of the surge in mortgage rates, the median monthly mortgage payment rose 15% to over $2,500 a month. Now that's a lot better than it was 2 months ago, but you have to remember that mortgage payment is still twice, that's double what it was 3 years ago. And the number of homes is still way lower than it was a year ago. Now, the only thing that could bring a sustained change in the marketplace is if we start and see an increase in the number of listings, the number of homes that are on the market. And guess what? We're starting to see that in some marketplaces. New listings are up, and the decline in old listings is starting to slow down. 5 of the 50th largest US metro markets, including Portland, Oregon, and Houston, prices are decreasing. Redfin thinks that the trend will spread to more cities, and in 2024, even as mortgage rates slip a bit further, the trend should continue. Overall, Redfin expects that we'll sell 4.3 million homes in 2024, and that's a 5% increase over 2023. And mortgage rates are expected to drop to 6.6% by the end of the year. The real estate market is constantly changing. So click on the video that's on your screen right now so that we can keep you up to date with housing inventory, mortgage rates, all the factors that are constantly changing, affecting you and the real estate market. We'll see you there. The Room.